a reggae album, a gospel album, done a bunch of different genres. Is there any genre you haven't tried that is, because it feels like this next one you're doing is sort of back in your sweet spot. I did a jazz album that I haven't released yet. More or less, I spoke with one of the jazz music. That was a genre that
Hi, Warriors. The whole dream team is here for you today. How's everyone doing? Scott, good morning. RC, hi, Blake, Mike, Bran, AJ, Ingmar's here, Ryan's here. Okay. Patrick, AJ. Hi, Laura, Patrick Highland. Haven't seen your name in a while. How are you? And Sinatra. Okay. So let's go to work. Who's ready to work? The work, just the work in life. All right. So I don't know if anything happened. I don't know what Norges is meeting, but it gave up the ghost a little bit. So, the whole market's focused on this. Why don't I start with Ryan on yen?
Good
And
morning.
I know we have Grega here, and we have since the metals have been on a run and yields have finally come down and dollar breaking. We have Stelios to take a victory lap here today. So put on your track shoes, buddy. All right. I'm gonna be with you in a minute. All right. So anyway, hey Ryan. So help me have a victory lap in the yen this week. I want to be a seller at 57. So, instead of the yen, US dollar yen going down into the BOJ announcement, maybe it's going to go the other way, rally into it because, it's kind of already priced in. That's the attitude, or it won't be as draconian. And that ends up being the rally to sell back at 6.5 or 7.
Yeah, I think you could probably make money both sides. If you get a dip on the BOJ, you could probably buy that up to your 157.
Okay.
So, yeah. So why not have two trades instead of one? But
Yeah.
Yeah,
It's good to have options. It's
Yeah,
good to have options, and it also shows that, you're not a bull or a bear, you're a trader.
yeah.
Okay, everyone thinks they have to be bearish or bullish. I think that your best mental position to be a trader is strongly neutral and let the price guide your biases. So anyway, anything else on the board that's capturing your interest? Decent follow through. The yen is cracking the longer term trend line. I know there was one that broke here. 350, like Blake said, held like a champ, and I can't find a reason to get bearish. Euro, despite all the negative. I see there was some negative news in Germany yesterday. Economic news. Um, are we really on our way in Euro?
We hit the 450. We hit the 450 I was talking about. So it's about in the 50s at the moment. And
Right.
We had a little nudge, couldn't get through. Same in Aussie dollar. I've got a big zone, 62 70s to 85. We nailed that,
Okay.
couldn't get through. So, yeah, the dollar's weakening, but it's a bit of a grind at the moment. And I said in the chat room this morning, this is getting into one of those moves where you're not getting a dip to buy, and then 2 sessions later it's 100 pip higher, and you couldn't do anything. So Aussie is one I'm looking at as maybe getting a clean break.
You mean breakout that it's bottoming?
Yeah, breakout. So
Yeah.
62, 85-ish, 87. If we get there and start holding it as support, then I might look at that one to try and get on this move. But yeah, it's, cable hit the 38.2 fib of the I think the December leg down, and couldn't get through there. So yeah, they're still respecting the levels, but the force is with a bit of dollar weakness still. So you've got to respect that.
Okay, yield wise, I'll bring Stel in now to talk about yields. You finally got a nice clean break, but something I know, short-term yields seem to be dropping much faster than duration. So far, it's a decent bounce in TLT, but I'd like to see it pull back and put in a higher low before I get interested. And the main reason is a daily. So, I want lower rates too, but, I look at this right here and we really had no divergence. It almost feels like it was just, like it just came over from the rubber band just being stretched too far right now. I'm not saying it can't go to 90, but the long end of the market still looks like it's not complete. So let's talk about objectives in silver. I know you're long. Still way underperforming gold. I follow a guy. I interview a guy. Bob comes in here. He operates silver vaults in Idaho, and he was talking about in this last rally in silver, this last pop from 30, that there actually is a squeeze going on based upon what's happening in the warehouses and lease rates going up. And there's pressure on shorts right now about, like what people have talked about for years, kind of like what happened in nickel. There's more outstanding paper shorts by a ton and they're having to go to substitution on the type of bars they're delivering against their contracts. So the physical market right now is under duress because lack of supply for short sellers to cover. Have you been reading about that?
Yeah, but of course, and if you read about silver, there's been a deficit for the past 2 years. It's projected to remain. Having said all that, with all these fundamentals, we should have been a lot higher when we're not. So there must be a reason for that. But you are right. Actually, Scott wrote here on the chat, Bob Coleman is a man for silver. You interview him. You've interviewed him a few times. I think he's really good and really on top of all this.
Who is it? What's his name?
Bob Profits Plus ID, Bob Coleman.
Oh yeah, that's who I'm talking about. Yeah.
You were talking about him. Yeah, exactly. Okay, let me take the screen for a second.
I forgot.
Hold on.
All right, I now lease rates have gone up on screen shares too. Go ahead. Go ahead.
I've got the screen right. Yeah.
Yeah,
so,
you got it.
I'm going to start with yields because you started with that as well. I agree with you in terms of the 10-year US. So you talked about TLT. It's pretty much the same thing or almost. I want to see below 445. So this will take out the 50 DMA and these previous highs. If we see that, then that's going to be roughly where you had TLT as well. And then that to me tells me that we're probably going higher and lower. I mean, from there, and it remains my thesis that we're going to see lower yields. I think Trump is not inflationary. I think he's more deflationary. If he goes on with what he talks about, reducing government spending, etc., then that is definitely not inflationary. And tariffs is. It's a difficult thing to determine if they are inflationary or deflationary. Theoretically, they are inflationary because if you slap on an extra price on things important from other countries, then the consumer is ending up spending more. Of course, they're going to change the products that they buy to prefer, locally produced products rather than externally produced products. But still,
but
overall,
that is theoretical.
yeah.
Stelio, because there are many products that after these industries have completely closed in the US, there is no local alternative, right?
Yes, and also the price for raw materials is going to rise for stuff made locally. So tariffs are inflationary theoretically and practically, I think. The question though
I
is,
agree with you 100%.
the question
I
though
think
is
they're
what?
getting more than higher prices, guys. You know, it's one thing to get ripped off and pay an exorbitant price. It's another thing not to be able to get that thing that you would pay an
Yeah,
exorbitant
true,
price for.
true.
There will. I think that'll bring on some spot shortages in
Yeah.
everything.
Well, the question is, what is he going to do with tariffs? Because he said a lot of things, and he's okay. It's the second day, so we can't really expect too much already. But let's see what he's going to actually implement. So for me, as I said before, yields are going lower. I need to see this drop below 445 for me to be more certain about the trajectory. You talked about silver, and we're going to have a look at gold as well. Silver is underperforming. The gold-silver ratio is at 90 or close to, which is very high. Shortages, there's a supply deficit. I mean, all sorts of fundamental reasons for silver to be higher, but it is not. So a lot of patience required. I got long at 29.75. A couple of weeks ago, I got long at platinum at 925, and I still like these trades, but I'm going to add if we break above this, well, it looks like a channel to me, but you know, whatever you want to call it.
Let me ask you something. Being a
Yeah,
position trader, a lot of people want to be, but a lot of people just can't.
yeah,
They don't have the kind of patience that's required. But plus, you have to be willing to give up profits on a position trade during corrections in that trend.
yeah.
How do you handle it? Do you handle it by not watching it?
Well, what I do is I scale in, scale out. So when we were breaking out here at 33, actually just before 33, I unloaded uh, almost all of it, apart from my core long, which was from 23.10, which I'm not touching. So, and as we're breaking out or trying to break out, I unloaded, and then I buy again slowly, ease in, ease out, scale in, scale out. So to answer your question, when things go sour and you're negative on a trade, well, the way I trade is I try to give myself enough leeway by trying to enter, obviously, at as best as I can, so that my positions have room to breathe. I don't have leverage, and I'm not pressured. Oh, I'm down, 0.2%. I need to cut.
No,
So of
I'm
course,
talking about the holding aspect
oh,
of being able to sit.
Yeah,
Do you walk away, like say your
yeah,
position, you don't sit around and go from a 4 hour to 1 hour and you're looking
no,
at it. You
no,
let go and let it go, right?
yes,
You
uh,
can't pay attention. If you pay too close of attention to the market, it's going to be hard to be a position trader. I don't have that kind of patience to do it.
yeah. Well, I don't look at anything below one daily charts. I don't look at anything
Okay.
shorter. This is the
There's a
chart I
tip.
look at. Uh,
There's a tip.
but that's
Okay.
what works for me. Okay, it doesn't
All
mean it's
right.
Yeah,
gonna work
same
for
with me,
everybody.
Stel, as you know.
All
Yeah,
right. So, I mean, that's an important lesson because people probably ask themselves, I know I have for decades, why can't I sit to objective? It's because, I'm looking at 4 hour stuff and I go, well, I like the position, but I think something counter trend's going to develop. I think I'll just take it off. I'm smart enough to know I could catch the correction and, be fully positioned for it. That is a fool's errand because you
yeah,
turn your head for a minute and you've already let go of your position and you miss a correction and then it's higher than your last exit and then deal with that psychology,
yeah,
right? So
yep,
anyway, yeah, just thought I'd do that. All right, so
yep.
are you go ahead.
And I was just going to say gold very close to the all-time highs. I really don't see this reversing anytime soon, especially if yields go lower. The dollar is interesting. We talked about it before. Trump always favors a weak dollar, and I guess the markets may be starting to price that in. Again, not a huge move yet, so I'm not making anything out of this. There are a couple of pairs which are at
But
very
you know what,
interesting
Stel,
levels.
if you stay on
Yep,
that for a second,
yep,
if you look at the dollar right there under the lows from the highs, measures to your breakout line around 105. So
Yeah.
if we start closing much under that 107.5, it opens the door to 105 and change.
I agree.
I think.
I agree. 100%. Yeah.
All right.
One pair which I was looking at again is the dollar Norway, which I like to be long Norway, so short dollar Norway, euro Norway, any Norway pairs. And
You know, we have the Norges Central Bank tomorrow.
we do tomorrow. They're not expected to do anything though, right? Not
No,
expected to change rates.
March, if anything, but they could end up just, staying just neutral, and that would actually in turn be a little hawkish because the market's expecting them to suggest that March will be their next.
And the other thing we need to look at is what they're doing with the currency purchases or sales of krona, because they keep selling krona, buying euros, right? Is it euros they do mostly? I can't remember. But I like this price action because we broke out of this zone. We came back, retested, then break out. So this move here must have taken lots of people long and cut a lot of shorts. So if we manage to break below, this is 50 DMA around 1120, we're close. If we break below that, I think then, and barring a broad dollar rally, I think then this is going towards the middle of this area. So, 10.
Some of us started actually buying Norway this morning.
Well done, some of you.
In the Forex Analytix trades room.
Cool.
Let me ask you, Blake, while you're here, when I look at what happened in Canada after the sanctions yesterday, it kind of reminds me of, okay, Canada took the punch and is now saying, is that all you got?
I don't know. I've listened to a lot of people on Canada, and I first of all, I actually shorted the dollar Canadian this morning as well.
But didn't it take the punch pretty good?
They did. I
mean, it didn't kill Canada. It didn't.
Well, I'm gonna point something out here in a minute because the date that we have to mark down on our calendar is February 1st. But I'm gonna show you what the betting markets are showing us as far as tariff hike risks. There's always a lot of threats, about tariffs. I believe that Canada will eventually see some tariffs. To what extent, I think is still unclear. And I believe that if they are hefty tariffs, if it is, it could really have a negative impact on Canada. So, I mean, I think the market is in a prove it state. You gotta, prove to me that you are, going to be imposing tariffs, and we want to see how much versus, just threats right now. And I think that's what the market's suggesting.
Okay. So they're just threats still.
Right.
He didn't sign anything. There's threats.
Not yet. Just February 1st. February 1st. That's not this Saturday, but the following Saturday.
Guys, this is something I've talked about multiple times in the past. We must not lose the real economic concept of what that means. Trump and a lot of people equivalently have done in the past are trying to persuade that the US is being taken advantage by its trading partners, right? The reality is the exact opposite. Wealth, as we've discussed before, is actually the creation of goods, not the consumption of goods. There is nobody that isn't willing to consume stuff. So, in essence, importing stuff from a country that have been made with tangible commodities or, raw materials or whatever, is something that is in benefit of your people, right? It means that you're not producing that something, or you're not producing it at a competitive price, and you're importing it from somebody else. And what, if we're talking about the example of the US and it's not the exemption, what do they get back? In essence, IOUs, right? Mostly IOUs. So who is the benefited part in this case? The person that gets IOUs or the person that gets something that is tangible, a real product, a real commodity to use? meaning
and cheaper.
and cheaper, meaning if actually you go through with imposing strict sanctions or tariffs or whatever, who do you think is going to end up hurting the most? Your trading partners, which, you know, they will need some period, but they will adapt because they have, don't forget, somebody that produces something has two alternatives. Actually three alternatives. Alternative number one, finding another export partner to send their goods. Alternative number two, consuming the goods they produce themselves. Right? In the case of China, that is a very viable alternative that would increase the quality of life for the local population as well. Alternative number three, reduce the amounts you're producing of whatever that is, but still that leaves you with the raw materials to do something different with them. So at the end of the day, who is going to end up if Trump goes through with very strict tariffs, etc.? Who's going to be left being more damaged as an economy is going to be the US. I hope that the Trump administration realizes that, and it's more of threats to achieve, better trade terms than actually, go through all the way. Because I think the US is going to pay for it a lot more than Canada will, and China will, and other trading partners.
Professor Volgi has spoken.
We have
And
Greg
you
as well
can-
here.
Yeah, I know, but I just
him in.
want to let people know they can monitor, or what's that called when you sit in on a course of a professor for the term. You're not getting the credit for it, but you're there every day. Anyway, I would. You could learn a lot about economics from Steve. So, when he's talking,
John Hawkins, by the way, I want to answer to a comment. He says it's a one-time price change, so the inflation rolls off. What your comment is partially true, meaning that yes, let's assume that for some reason next month all prices go up by 20%. I'm going to make it a very, very simple example, like a stupidly simple example to make the case for you. So that would mean that inflation would go up by 20%, but then the month after that, right, the prices would remain as they were, right? So then next month there would be no extra inflation due to that. That's your comment in essence, which is true. The only problem being is that even a one-off big increase in prices means a non-reversible decrease in purchasing power. So inflation indeed is a measure of change, right? It's measuring the change of prices, but that doesn't mean that if the prices stop changing in one direction, the damage that has been done in eroding the purchasing power of people is being unwound. So don't confuse one with the other.
Thanks, Steve. All right, so there's your answer about one-time roll-off, and let's bring Grega in. Grega, I know you have something you want to show. That's why you're here. Dixie turned. Do we have that bottom there, buddy?
Hey, can you see the
And
screen?
Yeah, we have Dixie and
Yeah,
ZN.
yeah. So basically, what we are seeing is a very nice reversal on the US dollar that we have been talking in the past, that when we spotted this wedge formation, and now when Trump is back, it looks like that this can be a continuation towards even lower levels. I'm just waiting if we can finally break quite significantly below this 108 support that we are right now, but I think that there is a good chance that we will see actually a straight continuation to the downside. So if we go back to this chart and just respect what the dollar is doing, then obviously we can see that everything else is moving to the upside. Treasuries moving to the upside, US yields coming down. We have cryptocurrencies recovering at the same time. Obviously, euro, gold, metals, stocks as well are doing pretty well. So it looks like that we have these correlations that are doing pretty well and are normal at the moment. So in my opinion, there will be more dollar weakness. And even if we look at the treasuries here, I think that here we had a pretty nice and strong rebound, which I think can take us even back to 110 to retest this channel up here. More importantly, this looks like an impulse on a smaller time frame. So even if this would be just a temporary pause, I think that we should see some further upside. So with that being said, I think that there is opportunity to be on the short side of the US dollar, especially if we will get some retracements now after this current dollar dip. So I would wait some retracements first. But if I would have to choose between pairs, maybe it's not bad idea to look at some of these commodity currencies, particularly Aussie and Kiwi. I would avoid Mexican peso or CAD because of tariffs. But these two are doing pretty well. And if you look at Aussie here, we are basically trading quite well out of this downward channel. And looks like that this can be some small wedge from the lows. So that's why I said earlier that maybe it's worth to keep an eye on some next retracement here. Currently, we are at some resistance up to here at 63 levels. So I think that the next big dip could be very interesting to join this trend. Looking
What's
at
your
yeah.
what's your revised gold count?
Yeah.
Because I always had a hard time not being bullish gold while I was looking for a peak in the dollar. So where are we at on gold and silver now?
Well, I still think that gold obviously will continue to the upside, but I cannot say for sure that wave 4 is finished here, because if I look and compare this degree of a correction to the correction of wave 2, which are of the same degree, you can see that wave 2 was much bigger and even deeper. So maybe we'll even see something more complex here, maybe even retouch the highs, and then we turn back into this range. But overall, I just still cannot trust metals here. I just realized that if dollar will come to the downside, that gold will explode higher. But overall, I just don't see any good trading setup, at least not from my concept.
Yeah,
and
not here. Yeah, not here.
And silver is also, I mean, it's not performing well like maybe we would expect in this current environment. So maybe we'll still see some kind of a dip that will allow us to find some better entries. But overall, I just think that metals will be trading higher, but I do not see from an Elliott wave perspective any good entry at these prices here. Even if maybe we could remain stuck here for some kind larger big triangle here, maybe then we will get few chances in a few weeks. But for now, at this stage,
could we go to new highs and relabel that maybe 5 instead of that being 5? Relabel that an A, and then new highs be in a regular B, and then get a correction?
Yeah, something like that.
Okay. I thought I'd help you out today.
Yeah. So
anyway, Grega proved he's human. How about that? I didn't think you were.
I mean, and it's very important just to understand what each of the trader has its own concept. And I know that I'm getting some messages that I'm bearish on metals. Well, I'm not really bearish. I'm just more neutral. But I know what kind of a pullbacks or structure, what I have to see in the markets to turn bullish from the current levels. For example, at the moment, I just don't see the wave structure that would allow me to look for potential trade on the upside.
Appreciate that transparency. And did I interrupt you with something else you were going to finish up with?
I mean, tomorrow we have BOG, and I think that this one has some pretty interesting setup right here. So firstly, we turn to the downside impulsively back in at the start of the month when the US yields were keep moving to the upside. We were seeing just a temporary spike to the to this 159 levels and then turned down. So looks like that we have now this impulsive price action So in my opinion, there is a chance for a deeper correction. This one, I see some very nice resistance and levels that I will keep an eye on tomorrow around to 157.
And that's your level you were looking at, Dale, 157.
Yeah.
So
Yeah.
there you go.
Yeah.
There you go. Hey,
always like
real
that.
quick, Grega, thank you so much. And I know Dale's going to take over for an interview, but do you mind if I grab the charts? I just got to show you guys one thing.
Sure.
Thanks, Grega.
Yeah,
Thanks.
thank you, Greg. I really appreciate it. And like I said, I know
Thanks, Stel.
we had a full team here today, and Ryan and I didn't get to really chat a whole lot, but that's okay. But I wanted to mention something really quick. As you guys have seen overnight, the dollar has really, has continued to press lower, and we're if you look at the dollar index, in my opinion, we're at some pretty key levels. Actually, here I'll just do it this way, because if you look at the dollar and look at the levels that we're testing, this is from the 2022 level. You can't see it all the way back there. You have to go to the weekly chart to do it. And then this is the 2023 support. So we're right in the support zone right here with the dollar. The risk is at this point with, Trump threatening with tariffs. If you look at like the betting markets, if you go to Polymarket, for example, and this will tell you, between this and Kalshi, these two prediction markets, you can see what the risks of Trump imposing tariffs by certain times and what the market is thinking. And basically what I'm just going to show you really fast is that the market doesn't believe that Trump's really going to impose tariffs, by February 1st. I think it would be more of a surprise if that happened. So what that also leads us to believe is that, between now and February 1st, which is next Saturday, not this Saturday, but the about a week and a half from now, we could see a continued rally in equities as equities continue to say, yeah, prove it. I don't see, the Trump team, administration actually implementing any tariffs between now and then. So, here we got the S&P that's, nearing, we're just, less than 20 points away from all-time highs. We're probably going to break out to new highs as a result. And this will probably keep the dollar pressured. And yes, are there going to be threats? Yes. Could we get, some jolts like we saw last night or a couple of days ago? Well, on Inauguration Day. Yeah, we can see moves higher, but overall the dollar looks weak, stocks look strong. And I think that inverse correlation between the two is here to stay, at least for right now. Obviously if tariffs actually get slapped on, whether it's China, Canada, Mexico, whoever, the moment that happens, the dollar is going to rally, and it's probably going to rally significantly. But you're probably going to see stocks sell off at the same time. But for right now, the market is, in my opinion, grossly and broadly ignoring the risks that tariffs are coming. And we can clearly see that in the dollar and in the broad markets. I mean, and that's pretty much the only message I wanted to get across before your interview, Dale. So there you go.
Okay. So I want to thank the team, everyone here. Stel, thank you. And Grega, thank you. Great. Grega, as Stel says, has one of the best hit rates out there. And I want to thank Steve for leading us, and you too, Blake. Thanks so much. We're doing our best to make the adjustments with our own trading and pass it on to everyone that hears us. That's all we can do. So I appreciate it. And, what a great time to talk precious metals with gold threatening to make new all-time high. James Anderson is with us. James, I remember you saying nothing was going to happen over the summer and that things would start to heat up in the fall. And that's exactly what happened. I want to ask you with something. Welcome back, by the way, James. Happy New Year.
Thanks, Dale. It's good to be back.
All the talk about the short squeeze happening, that bars are being replaced that don't exactly meet contract specs to, cover paper shorts and lease rates and gold going up. Are we really finally looking at where the market could have a blow up because all the paper shorts aren't going to be able to deliver. Maybe the next delivery month, big one, is March. What do you see happening there in the warehouses?
So the warehouses have had a lot of inflow in the last few months, especially in gold, some in silver as well, platinum too. I'm guessing it's basically bank desks just repositioning in case the worst came to pass and they actually do somehow suck in precious metals on tariffs. Although I think that would be pretty silly in the United States in terms of how much silver we use versus how much we actually mine and pull from our ground. It's like a 5-to-1 factor. Like we import 5 times more silver than we actually mine.
Okay.
So we'd basically be shooting ourselves in the foot if we did that. Our input costs would go up. And if, I think ultimately the tariffs are about setting up a situation for, reshoring a lot of high-end manufacturing. And so my hunch is he's going to be, hopefully, I would think they're smart enough. If they're going to use tariffs, they're going to be applying tariffs to products they want to compete in. So they have more of a level, playing field. So my hunch is precious metals will be exempt, but that is a hunch. They did slap tariffs on gold coming out of China. His last term in 2016,
Okay.
and so, for instance, gold pandas became.
Oh yeah, I remember those panda coins.
Yeah, they became a little bit more expensive, and that's basically just a 5% tariff, I believe, they slapped on them. So they basically became non-competitive, and they disappeared in terms of market share because of that reason. Really, it also didn't help that they went to a weird 30-gram size versus 1 troy ounce size, which is what United States investors are usually used to. So. But yeah, I see repositioning because I think banks are concerned, and it's understandable that they could easily get caught.
Yeah.
In a situation where they don't have enough metal stateside and they have to pay through the eye to get it stateside after the tariffs get them in. But I'm guessing that the authorities are not going to be that dumb, because if you look at just how much silver we really require to be industrially significant in the world. Again, we import 5 times more than we actually mine from our ground. So it doesn't make all that much sense in terms of competitiveness to do that.
Okay. I believe your take on the gold silver ratio was that the gold silver ratio would head higher. We're pressing pretty important highs here. Silver has underperformed gold by a mile. You looking for continuation of this gold silver ratio huge range we've been in, James, for about 2 years now, between 90 and call it 77, 75, 15-point range?
Yeah,
Could
it's right now it's been kind of trending in that area. It's going to break one way or another, and the question is obviously which way. Let me pull back a chart further back.
All right.
I mean, you basically have to. You got to cut through 87 clearly and start making moves toward lower 80s. And there's a lot of people in the market who think that's going to occur. I think Saxo Bank's on record saying they think it'll go back in the 70s later on this year as silver climbs toward 40. So that's the highest probability is that, I think, if you're talking about silver for the year, is that it'll tighten against gold. Right now, gold is leading. When you look around the world, I mean, it's in record nominal price highs in almost every major currency outside the United States dollar. So even in Swiss,
new highs.
Swiss francs, new highs.
You could go ahead and share, James. I
Oh,
released,
sure.
Yeah.
Sure.
So
let me share.
yeah. So with this red wave and everything, are you optimistic about the industry now, or
right
Trump
now,
going to be? Go ahead.
I mean, can you see my screen right now?
I see Google. Yeah, there you go. All right, there. Now I have gold silver ratio up.
Okay, cool. Yeah, in terms of the industry, like on the street level, on the retail level, we basically have a situation where the amount of buying has kind of slowed and dissipated, and there's a lot of people who are running out of cash, and a lot of sellers on the street level. You see a lot of people on a lot of YouTube channels who have brick and mortar stores talking about that phenomenon. Basically, the amount of sales is not that high, but all we are is really one major news event or anything in the market that really moves it for that to change very quickly. And so, you know, I remain reluctant to think that this is going to continue for much longer. I'd imagine something will occur.
Well, something new may be developing here, peaking the dollar over the last week.
Yeah.
That can't hurt.
Yeah, and you know, if there are tariffs against China, I would assume they're going to devalue the yuan, and that'll create holy chaos, I'm sure. In the
Oh, let it go. Yeah.
Yeah, they let it go beyond 7.3s, and that will likely create a lot of chaos and unknown unknowns that people aren't ready for, and there'll be a lot of things that happen this year.
I don't know. I don't
ahead.
know if it's going to happen. I know that he's planning to visit China, President Trump, within the first 100 days. So they're going to try and do a deal first, probably before it gets ugly.
Right.
Yeah,
it's so, you know, I would assume that that things aren't, you know, if you look at markets, they're stretched in virtually in terms of valuations. How long can we stay so stretched? Will it stay that way throughout his entire 4 years? I doubt. I imagine something will happen, and they'll try and that ultimately there'll be problems in the financial markets. I can't imagine that we'll continue to get through this sanguine as we have for the last few years. But, you know, that has been my more or less feeling for a long time, that we would eventually have some comeuppance. But, you know, as time goes on, it's pretty amazing how things have kind of stayed pretty calm.
Yeah. Well, I mean, this is a change. You know, anytime you go through a change, usually there's rockiness in the transition, getting from point A to point B. So we'll see. I agree with you. But in the meantime, we're still blowing off in the S&Ps, about to make new highs.
Yeah,
I'm very tempted to short it, but you know, you know how you put up an electric fence for a dog. Anyway, so what are we looking at here? Oh yeah, that's changed.
Yeah,
Dow Gold ratio.
I want to look at the Dow Gold ratio just to see it. It does seem like it's slowly rolling over. You know, we're at 2.2, and you know, it's a safe bet. I assume toward later on in the decade, maybe going into 2030s, we're going to roll back toward 1 to 1. And for people to not think that won't happen, I mean, that's just basically a continuation of this just rolling over in time. And, you know, it's a different phenomenon now with passive investing and all the flows, the way that they work in the markets. But when you just look at the concentration of the
what will the prices of both gold and the market be at 1 to 1?
At 1 to 1, you probably, that's a good question.
You have 5,000 gold, 5,000 S&P.
I would imagine so. That nominally it'll look still pretty high, but I mean,
maybe it's 4 and 4.
Yeah, 4 and 4, 5 and 5, somewhere in there. Yeah, that's probably right. I mean, just thinking it through, if you don't want to have a massive exodus of the stock market, you want to keep it nominally propped up as it devalues versus gold. So gold would be the one that would be really surging higher, whereas the S&P would kind of move sideways.
Do you still hate gold stocks?
Yeah, I still hate gold stocks. I definitely think that is a waste of capital for the most part.
All right.
And yeah, I mean, I can show people charts, and
it's the most contrarian trade on the board, don't you think? I mean, you know, I know it's been, but you know, just because it's been doesn't mean it will always been.
I know, but look at this. You know, it's always been. Just look at this terrible performance for the most part since 2006 or so. And this is you know, this is a contrarian winner, right? And that's the argument, is that you have to go through the destruction before the system gets reset or restructured before gold stocks can really make a move. And so I still think you need to have a rebalancing of the global financial system, and a lot less of these wars going on, and a lot less of these tariffs and fighting over, you know, spheres of influence. And so that's a long.
That's not going to happen.
Well, that's not going to happen anytime soon, and that's why I think miners are a place where capital goes to languish and die. Yeah, I mean, you could have your lucky picks, I suppose, in North America, the right ones in Canada, the right ones in the United States, and the right jurisdictions. But I would be remit. I would not want to have my capital offshore in miners, just given how many of them are going to have problems in terms of nationalization and other problems in terms of profitability. I just think like African miners, for instance, those are somewhat scary given the situation a lot of these countries are politically.
Yeah. So, you know, therefore, know the nation your mine is in.
Totally. Yeah.
There's land grabs and everything. So
Exactly.
okay. And price projections for gold in 2025.
2025, you know, it seems like the bulls in general are saying 3,000 is like the next number, and I'd say that's
we're already there. It's a layup.
Yeah, we're getting close. You get a breakout of about 2,800, and 3,000 is not far away. It's hard to say if we're going to keep moving sideways through this, you know, the winter and spring and summer, and then eventually have a move beyond 3,000 in the fall. That's probably the most probable way it goes. And
it's
you know,
still okay. Go ahead. I'm sorry.
No, it's just going to set up a situation that's frustrating a little bit. But that's the most likely scenario in my mind, is that it happens in the second half of the year. Maybe not now.
And a period we might be able to look for silver outperformance over gold, and the XAU turning back down and maybe trading. But you and I have talked down the road 50 on the gold silver ratio.
Yeah, the gold silver ratio at the moment, you know, it's obviously fluctuating between 90 and 87. So for it to move back in the 70s, it's probably second half of the year. I think, you know, you basically have to get through this muddling sideways, and eventually silver gets a move back toward 34 and back beyond 34 toward 38, even 40 toward the end of the year. That's the most probable, I would say, unless there's some type of panic in the system and we have some deflationary episode.
You getting any interest in platinum? Platinum looks to a bottom to me.
Yeah, platinum. It's so hard when you look at platinum, because it's I mean it's one of those things where look at the chart on like a long-term basis. It's 1,000 seems to be 1,000 seems to be the number that it's going to be floundering about. It'll probably pop at some point and retest this high 1,300, and then probably reset back down to 1,000. So if you're a long-term bull in platinum, you have to think, try and acquire platinum around 1,000 and have a view that's going to last 5, 10, 15 years. Because for platinum to go from 1,000 to eventually back toward these highs at 2,300 and beyond later on in this bullion bull market, you're looking at it going toward 5,000 maybe into the 2030s for different reasons. But it's 1,000. It's a long-term hold, something that you could use as a percentage of your bullion allocation, but I would keep it at low single digits. I wouldn't expect platinum to do anything crazy in the next year or two.
Same with palladium.
Palladium, yeah, I think palladium was the one that really, you know, it really showed itself in terms of that's platinum. I'm sorry, it showed itself in the, you know, obviously we've had a huge run at 3,400. We're at 1,000, right? To see it go back toward, you know, 1,800,
70%. Yeah.
Right. It should bounce at some point, but palladium out of all of them would be my fourth choice. I would say it would be first silver and gold, and then platinum. Those are the three I would be focused on.
Okay. Why don't you show the folks where they could find your YouTube channel and where they could reach you to do physical purchases, and there you go. SD Bullion.
SDBullion.com, and the bottom half you'll find a lot of my videos. Every week I do videos that basically update people on what's going on in the markets, and so the videos tend to be 10, 15, 20-minute long, and they're usually synopsis of what's been happening in the week, precious metal related. And so we keep people up to date on what we're seeing in the markets, and that's a weekly affair. We do it on Friday late in the day on YouTube, our SD Bullion YouTube channel. And so yeah, it's free, so you can totally go check out those videos. If you like it, subscribe.
Okay. And did you buy any FAR coins?
Yeah, I abstained from that, and
there's 1.7 billion in that instrument. What's the utility of it? You bring it to the bathroom with you, or keep it in your pocket in case you don't like who you're out with?
Yeah, I don't know if enough has been said about what Trump did with the Trump coin, the Millennium coin. I really don't think. I don't think the rest of the population even knows or
they
understands.
don't.
No, they don't.
On paper, what is he, like 30 billion richer?
Yeah, if that 80% cut is spread amongst his cronies, I'm sure they're all billionaires, and
that has never happened in this country.
No, and it's just it's appalling.
Not even an endorsement of an asset class by any president in my lifetime.
No, nothing like this has ever happened. It's pretty incredible.
Are you sure that you're glad you're back from Panama? You're laughing. That tells me. All right. Yeah. All right, James. Always great to get together with you. And listen, if you want advice on physical and insights on the physical market, James is one of my go-to guys. So follow him on X at James Henry Ann. Check out his videos, and everyone should own some and have a coffee can. Don't you think, in these times?
Oh, for sure. Central banks, a lot of them are, their allocation targets are 20% of their sovereign savings, and they're front running in quantities larger than they've ever bought before. And so rather than listening to their words, just look at their actions. Most of them are going into gold, and they're doing it heavily. And so if you're someone who has a liquid net worth that doesn't have any gold allocation, you're obviously behind the curve in terms of what central banks have been doing. So, to be like Russia, look at me, Russia was one of the first that did this, and they've been doing pretty well in terms of where they are fiscally because they got ahead of this.
Then why is their currency crashing? Why is the ruble crashing?
The ruble's crashing because they don't have the plumbing like the U.S. dollar does. And so they basically don't have the power that the U.S. dollar has at the moment. But that'll change in time. I would imagine Russia will be fine overall. They're going to be probably the largest miner of gold for the next 15 years, or one of them. And so the amount of gold that they have sitting in their tundra, and their frozen tundra, is going to be coming out in the next 15 years or so. So I'm sure they'll be sound financially.
What are they fighting over in the Arctic, James?
Oh, that's a good question. I mean, that's, I think, why we want Greenland, right? I mean, it's to give us a little bit more exposure toward what's underneath the waters there. It's obviously, when it comes to like the way the world is, you got to look at territories in the United States. We're one of the most blessed in terms of having two oceans between us, and the blessings that we have in terms of what's in our land and what we can mine and what we can drill for, et cetera, et cetera. So we've been lucky in that sense. And to see Trump wanting to get exposure to Greenland so they can have more exposure to the Arctic makes sense, because we're behind. I mean, Russia is well ahead of us in terms of their ability to exploit what's in the Arctic zone. And so I think that's what he's saying, and he's trying to get ahead of that.
Okay, price of silver when the great unveil of extraterrestrials are with us happens.
Price of silver right now, in terms of like the ultimate, this chart I like to bring out because it basically tells you what happens in a bullion bull market for silver. This blue line is the kind of shadow Eastern price. I'm
not seeing that. I'm seeing your Twitter page.
Oh, I'm sorry.
That's all right.
Let me see how I can pull that up.
You'll have to probably stop sharing and then share.
No, I can do it.
Oh, okay.
Here. All right.
Look at this guy.
Post this. And
high
then,
tech.
It.
Yeah. High tech, young punk.
And I can load it. Okay, there we go. All right.
Yeah.
So this blue line right now, that's the all-time silver price in the Eastern world outside the COMEX hours. It's ballooned to 382 an ounce. And that's just, from 1970 until today, trading in terms of outside COMEX hours. That blue line always catches up with the red, which is the spot price line in a bullion bull market. So this huge gap here is the gap that I'm expecting to close in the silver bull market. And it'll probably close next decade at some point in a major commodity bull market. And it'll probably close closer toward triple digits. I would imagine it'll probably come down some, and the silver spot price will go up. But once that closes, that's the time to start really selling off a lot of your allocation to silver and moving elsewhere. And so ultimately,
What a
this
great-
is one of the charts that I keep an eye on, because it's happened before. It happened in the mid 2000s, happened in 2011. And my contention is it'll happen again, probably next decade, some point.
Why don't you tweet me and tag me on that chart?
Yeah, I'll
Okay.
send it to you that way.
That's a beautiful chart. Everyone, if you can take a screenshot, great way to wrap up this. Look into future times with James Henry Anderson, and always appreciate our conversations, buddy.
Yeah, Dale, it's good to be here.
All right, man. Happy New Year. I hope that you and your clients have windfalls. I'm saying let's have a great decade this year.
Sounds good.
All right, bro. All right, James Henry Anderson, everyone. You could join the team in about, I don't know, 16 minutes. People are thanking you, James, and that's a wrap. You're welcome, Scott. Don't just count your pips, count your blessings, right? David Hess, Ingmar, all you guys. See you tomorrow. Adios. Thanks, James.
All right, thanks, Dale.